What's going on, guys? In this video, we're going to talk about AMC. Once again, that's AMC Entertainment Holdings with the ticker symbol AMC. Guys, if you like the information and analysis that I'm providing in this video, please hit the like and subscribe button. Let's get going. Today, AMC closed at the price of $15.50. It's down $1.46. That's roughly negative 8.61%. And in the after hours, we're still down at the price of $15.47, and that's negative 0.19%. So guys, as you can see, the whole market is red today. I'm actually making this video in order for me to send my support to all of the apes. Like I said before in my past videos, I am also an ape myself. So there's a lot of things going on right now as far as AMC is concerned. We have a lot of articles we can talk about. Okay, like I said, this video is for my fellow AMC apes. Apple is down 3.73%. Amazon is down. Tesla is down 12.18%. So guys, everything is red today, but of course we can actually talk about something which is from Investor Place. It says here, ride out the volatility and hold AMC Entertainment stock. So guys, this is an article for today. It says here, stay in the game as theater acquisition should breathe new life into AMC stock. So AMC Entertainment has demonstrated fitful price action lately. Wall Street seems to be ignoring positive news catalysts for the company. Investors should hold on for a bumpy but potentially profitable ride. So guys, this is from Investor Place. Ever since the onset of COVID-19, global movie theater chain Entertainment, AMC Entertainment had its share of ups and downs for investors. However, holding on to AMC stock should be profitable in the long run, it says here. So the funny part is some traders bought and sold AMC shares without caring about the company's fundamentals. That is true, guys. So there's a lot of YouTubers who talks about day trading AMC, but of course there's a lot of people that is holding AMC. As you can see, guys, if you go to Twitter, right, and just put in $AMC, you can clearly see, guys, that there's a lot of people holding on. I hold for you, you hold for me. Okay, so there's Sean Bray, Jimmy, there's a lot of people. Okay, just keep on scrolling down. Lots of people from all walks of life, they're holding on for their AMC shares. Here's an example of what I mean by volatility. AMC stock surged 7% on April 19 and then dropped 7% the next day. Clearly, this isn't the type of asset that's appropriate for everybody's retirement account. Instead, consider an investment in AMC Entertainment as akin to a movie with plenty of action, adventure, and thrills. Hopefully, this one will be a happy ending. The company was hit hard financially speaking by COVID-19 a couple of years ago. In 2022, AMC Entertainment must prove to the investor that it's back on track and it's in expansion mode. So, going straight to the source, AMC Entertainment revealed that the company had inked a deal with Bowtie Cinemas to purchase and operate 7 movie theater locations in Connecticut, upstate New York, and Annapolis in Maryland. In total, the deal comprised 7 locations and 66 screens. So, a golden opportunity. Glide path is an unusual term, but perhaps it's fitting as theater acquisitions indicate a comeback in progress for AMC. Oddly enough, AMC Entertainment isn't entirely an entertainment company anymore. As you may have heard, the company has bought 22% of Hycroft Mining Holding Corporation, a Nevada-based gold and silver mining company. So even Investor Place, guys, they're acknowledging the efforts of AMC. So of course, we all know that they had inked a deal with Bowtie Cinemas. That's one, and of course another one is they have bought 22% of Hycroft Mining Corporation. So it says here, to be honest, many traders are still probably trying to adjust to this new direction for AMC. Now informed shareholders will have to pay attention not only to the movie theater industry but also to the precious metals market. Okay, as you can see, guys, in the charts, SPY has been going down lately, and of course everybody is getting worried what's going on with our economy, right? Interest rates have been increasing month after month, and of course not only that the huge companies are feeling this, even the short sellers. So last Sunday we have an article from New York Post, it says here, Melvin Capital's Gabe Plotkin apologizes for losses to investors who want their money back. Okay, so it says here in a dramatic about face on Sunday, Melvin Capital founder Gabe Plotkin told investor he was delaying a surprise plan to return their money he revealed last week, the Post has learned. Instead, Plotkin said he planned to take the next few weeks to decide on next steps before closing his hedge funds. Quote unquote, he said, "I'm sorry, I got this one wrong. I made a mistake. I apologize," wrote the hedge fund mogul, who famously got slammed by meme stock investors on Reddit last year who had targeted his fund for being a prominent short seller. So even not only the retail investors, guys, even Elon Musk, he hates short sellers. So is this a good news? The 100%, guys, this is one good news, and everybody is waiting for these dominoes to start falling. Okay, so we can actually see that tremendous wealth transfer of all time. So it says here on Wednesday, Plotkin angered investors when he suggested a plan that would return investors their capital at the end of June and then allow them to invest in the beginning of July. Melvin, which was down 21% in the first quarter, said he wouldn't try and make investors whole. Instead, he'd demand the performance fees of potential clients, including those who previously lost their money with him. Wow, interesting, right, guys? So, according to reports, Plotkin said he would keep the new fund small, under $5 billion, and focus on shorting stocks. Plotkin added on Sunday email, after speaking with investors, he realized his suggestion to shut down Melvin was a tone deaf. So everybody knows, Citadel advisors bailed him out during the GameStop saga, but it looks like Citadel can't bail them anymore. So they're planning to shut down Melvin Capital. So is this a good thing? Like I said earlier, guys, one domino is trying to fall down. And one more thing, there's an article that just came out today saying Robinhood to lay off 9% of full-time employees. So, it says here, Robinhood CEO Vlad Tenev announced Tuesday that it was laying off 9% of its full-time employees. Earlier this year, Reuters reported that Robinhood had 3,400 employees, and though that did not specify full-time versus contract, it looks like this cut may affect some 300 people according to TechCrunch calculations. The U.S. consumer investing and trading service company, which went public at $38 in July 2021, saw its peak value at $85 per share before entering a steady decline that saw its value to erode to a mere $10 per share. Personally speaking, guys, I also hate Robinhood, right? Because of them taking out that buy button at some point. So, of course, time heals wounds, but we will not forget what happened. The company lost 3.75% in today's trading. The market was lower today, overall another 5% in after-hours trading in light of its layoff announcement, meaning 300 people, ladies and gentlemen, will lose their jobs once the layoff starts. While Robinhood has reported some positive news in recent months, the company saw its value rise 25% in March, following news that it was extending its equity trading hours toward the goal of supporting a 24-hour-a-day activity. There also have been myriad struggles at the former unicorn. For example, the company announced a data breach last November that affected millions of its users. So everybody, most of the apes, they know that information, the data breach. Earlier this month, we reported that Robinhood and crypto company Coinbase had an advantage of going public when the markets were good, saying they were lucky that they went public when they did. They got to debut when the market conditions were hot and could float the attractive levels. What has happened since is out of control, but as they are repriced daily, they don't have a huge illiquid price tag stapled to their chest now that they have to live up in a later IPO. Personally speaking, ladies and gentlemen, there's a lot of brokers, platforms that you can use besides using Robinhood, because Robinhood is I don't trust them. That's it. I just don't trust Robinhood. That's just my personal opinion. I don't like them ever since the GameStop and AMC fiasco happened. And they have payment for order flow. They have a crooked ties with Citadel, stuff like that. So my impression with Robinhood, as soon as I hear them, I don't think, I'll probably use Mumu, Webull, right, Questrade, stuff like that. Okay, so I'm sorry for all those Robinhood fanatics, but I hope that when you hear this video, I hope that you guys won't hate me, right? We all have our personal opinions. I respect your opinion, please respect mine. So guys, in your chart here for AMC, we can clearly see that we will now start barcoding again. We have a huge support at around this area at around $12, somewhere there, right? So if we break out, hopefully anytime soon, if we break out in this trend line that I've drawn, I think we have a good chance to move higher again up to the levels of $30. As you can see, guys, we are now oversold in our stochastics. But if you zoom in here, there's a good chance that we can start moving up because the RSI is very, very low. So the RSI is decent, but your stochastics is saying that we are oversold. So it's not the retail guys that is selling their shares. Everybody is holding on to their shares. And that you can actually prove that here in the order flow distribution. So the outflow is 100% the short sellers. A lot of people, right, they're trying to buy the dips. You can see that here in the inflow versus your outflow. Okay, so going back to the chart here, we'll try to break down the last red candle that we have in a 4-hour time frame. So that's the effect of short sellers, because the borrow fee, right? They can just keep on borrowing, keep on doing naked shorting, right? Although it's not a proven fact, but that's what I believe in. Sorry about that. Okay, so there's a lot of short selling going on with the stock, ladies and gentlemen, and hopefully that will stop. I strongly believe that the stock market should be overhauled, right? They did not expect a lot of influx of the retail traders, retail investors that went and flocked in the stock market. So like I said earlier, I think Gary Gensler is not doing his job, or maybe I'm just getting impatient. But like I said, things needs to change, definitely 100%. Everybody is waiting for changes. I don't think they have to wait until the stock market collapses, right? And we need to we don't want to see dominoes start falling, right? People covering shorts, because it will definitely have a huge effect in the stock market, ladies and gentlemen. So that's not good. What I'd like for them to do is to do changes little by little, right? So we are investors in the stock market. I think it's about time that the people, the alphabet boys, the SEC, right? People in SEC needs to start to hear our suggestions, our voices, right? They need to start doing their job in the first place, right? Although they are under, they're under the payroll of other hedge funds. Of course, they're also getting some funds from the government, from the people. Okay, so they work for the people. They should start doing their jobs instead of just getting their paychecks month after month, right? So this is just my personal opinion, ladies and gentlemen. Don't get me wrong. Like I said, a lot of things needs to be done. Okay, so guys, if you like the information and analysis that I have provided you in this video, please hit the like and subscribe button. Once again, this is your fellow ape. Don't leave trades. I love you all. Peace out.